Good morning, traders. Let's get you up to speed. U.S. equities closed strong with the S&P 500 ETF up 0.59% and the Nasdaq 100 ETF gaining 1.12%. This rally was sparked by a surprisingly weak U.S. jobs report, showing a decline of 23,000 non-farm payrolls in July, far below expectations. This data is fueling hopes for a potential pause in Fed rate hikes. On the commodities front, gold surged an impressive 2.3%, while silver was up over 3%. WTI crude oil also saw gains, rising 1.15%. In fixed income, the 10-year yield dipped 0.21%, and long-duration treasuries were up 0.29%. The U.S. dollar index edged up 0.07%. Geopolitical tensions in the Middle East remain a key focus. Iran is demanding compensation to reopen the Strait of Hormuz, and there are reports of continued missile and drone strikes in Yemen. The U.S. military's munitions stockpiles are also a concern amidst the ongoing conflict. The U.S.-China AI competition continues to be a major theme, impacting tech and chipmaker stocks. Looking ahead, the S&P 500 faces several tests this week, with upcoming economic data and corporate earnings. Inflation data, particularly the U.S. CPI report, will be critical, with core CPI expected to rise 0.2% month-over-month. This will heavily influence expectations for the September FOMC meeting. Earnings season is still active, with 184 major companies reporting, including Berkshire Hathaway and Cisco. Also, keep an eye on the U.S. Treasury's $125 billion auction across 3, 10, and 30-year maturities. That's your market rep. The desk should separate fresh catalysts from background commentary and wait for market confirmation before upgrading a theme. If the same story keeps crossing without a broader move, it remains context rather than a new trading signal. If rates, the dollar, commodities, and index futures begin to confirm the tape, the next brief should elevate that theme.